Hello Mavericks, it's Imri again, and I'm back with today's market roundup. It is Thursday, January 25th. So today, as always, we will be doing a comprehensive review of the trading day, taking a look at any meaningful news. And there was some today. We'll be taking a look at the broader equity markets, of course. We'll take a quick look at some of the more commonly and widely traded commodities like oil and gold. We'll then be doing some technical analysis on the major indices, taking a look at the Qs and the S&P 500. We'll, of course, examine the market's internals and round things off with a look at some trading setups. Although, because I did yesterday's market roundup, we'll be looking at an update of yesterday's trading setups. Okay, let's get right into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Okay, so kicking things off with some market analysis. Well, as you can see here, all the major averages finished up on the day. Small caps actually bouncing back quite nicely. Gold more or less flat on the day, and that's actually a pretty impressive performance considering that the US dollar outperformed many of its peers today. And oil ending the day up big, and of course that's coincided with a rebound in the energy sector as well. But two big pieces of news today. Number one is Tesla down 12%, a big down day for Tesla. And the second is that the broader overall market really liked the stronger GDP numbers. So GDP came in to end off last year, at 3.3% for the quarter. It's much higher than the 2% that I believe many economists were polled at in terms of predicting. It's interesting, right? Because that 3.3 number is great, but especially interesting in the face of the Fed's interest rate hikes that we've seen. So it really reinforces our view here at Maverick that the Fed just might not be able to cut here. If economic growth is strong, remains strong, and inflation isn't really going to disappear and come back down to the Fed's overall target, that does leave the Fed in a very tough spot. So we'll see what's going to happen, of course, but today's price action, very, very interesting. Now, the price chart of the S&P 500 is also very interesting. I mean, we definitely hung in there. We hung in there today, but, all right, this is very important to point out. Look at this bearish divergence here. The bearish divergence is very, very, very interesting. Now, we peaked before, in terms of momentum, before we made new all-time highs. All right, so that is something that's very, very important to keep in mind. Okay, that's very important to keep in mind because it tells me that this rally is very tricky. Okay, it's tricky because we've cleared new all-time highs. Economic growth has been strong. We're going to see what's going to happen next week with the Fed, but I'm starting to feel like the risk is skewing to the downside. I think the potential for a large drop is a lot bigger than the potential for just a continued melt your face off rally. So I'm not saying stocks can't go up. We're still at a +3 in our rating, as you'll see in a couple minutes. But I'm starting to get nervous as a personal bias, right? So on my on my long positions, long options positions, long equity positions, I'm definitely not going in with the same kind of volume as I normally would. So if I would buy, I'm just using this as an example, if I would normally buy 5 contracts or 10 contracts, now I'm buying 2 contracts and I'm buying 5 contracts respectively. So I'm definitely cutting my position size here. Although the market's telling me to be long, some of my own discretionary analysis and experience tells me that it's in circumstances like these where I have where I've historically tried to compound gains a little bit too aggressively and suffered for it. So I'm trying to avoid making some past mistakes and repeating them. All right, moving on to the Qs, it's a very similar situation here where we peaked in terms of momentum back in 2023, even as the markets headed higher. but above both moving averages, and the slope of those moving averages is undoubtedly positive. Taking a look at our sector heat map here today, yikes, Tesla, big wall of red there. But energy coming back in a big way, ConocoPhillips, ExxonMobil, this sector was due for a bounce, and I still think it's a little too early to go bottom picking in that sector. But if you are very aggressive, you could certainly play it. I'm going to wait for a pullback, and if that pullback is controlled and tradable, then I'll be back in the energy camp and looking to buy that. IBM also had a really fantastic day. Google up on the day. Netflix continuing its rally as well. All right, so in terms of the outlook, not much has really changed. It's just this divergence is starting to make me a little bit more nervous. That's all. Okay, so now we're going to recap our trades from yesterday, kicking things off with Comcast. So I said Comcast had earnings coming up. Those earnings were, the reaction to those earnings was fantastic. We had a big move in the stock today. I don't think the move is done. I think we're obviously seeing some profit taking here, but I don't think the move is done. I still have $47 firmly in mind here, and we could potentially break even higher than that. Okay, so the next trade from yesterday was Old Dominion. Said this was my sideways pick, and yeah, today closed absolutely nowhere. Great sideways trade. Now, of course, I'm not suggesting that you do such a short dated expiry. I'm just saying I expect the sideways motion to continue in Old Dominion. All right, and then last up we have Agnico Eagle Mines. All right, so we have an inside bar today. I just need to see a break below 48.50, and I think that's going to open the floodgates as far as selling pressure goes. I would expect a quick drop somewhere in $46 and change mark, and then a bit of consolidation. And then if that breaks, that consolidation breaks lower, then I see $43 is very, very possible. Okay, so as far as tomorrow's outlook goes, look, the market's rallied off the back of strong GDP growth. Unless the market really realizes, hey, maybe this means we're not going to get the kind of rate cuts as early as we thought we would like them. Unless that happens, and I think we're in the grips of pretty much a mania here, I think the market's going to maintain its bid. As far as economic reports go, we've got core PCE out tomorrow, could potentially be a bit of a market mover there. And then we have a slew of earnings from some big names coming out tomorrow: American Express, CL, NSC, and ALV, all tomorrow. All right, thank you for watching, traders. See you guys in a little bit. Bye for now.